Are you looking to grow your property investment portfolio? And are you struggling with the lending ceiling and brokers and banks not being able to give you more money? In this video, we're going to talk about one key area that can stop your lending capacity and how you can potentially overcome it and look to move forward and grow your property portfolio over time. My name's Luke. I talk all things real estate, renovating, and financial freedom here on the channel. Make sure you drop a like on this video and subscribe down below. So what on earth am I talking about? What's stopping people to grow their property portfolio and boost their lending capacity? This is debt to income ratios. This is also referred to as DTI or a DTI ratio. And essentially all this means is APRA regulated banks, so banks like CBA, NAB, Westpac, these banks aren't typically able to lend to you if you have higher than a 6 times debt to income ratio. So if you earn $100,000 and you have absolutely no property and no other income, typically these banks will only lend you, say, $600,000. That's 6 times your current income. One of the great things about investing in property is it also helps you derive cash flow. So say you also have a property portfolio that brings in $100,000. So you have income of $100,000 and you also have a property portfolio that brings in $100,000. You'll have $200,000 worth of income. The banks will then typically reduce the rental income down to 80%. So instead of taking $100,000, they'll only take $80,000. So you'll have $180,000 of income to go towards your serviceability. This will give you over $1 million worth of borrowing capacity. So if you're getting stuck in terms of debt to income ratios, you need to potentially look at higher cash flow opportunities rather than just focusing on capital growth properties. In terms of building our property portfolio, Emily and I have worked through 2 phases. When we started growing our property portfolio, it was about growing our asset base. So we focused on capital growth opportunities. So as our serviceability got tighter and we were looking to create more cash flow from our properties and grow our serviceability, that's where it makes sense to move towards cash flow opportunities. So one of the levers you can pull when focusing on your debt to income ratio is to go for higher cash flow opportunities, which are going to boost your income and serviceability. Another aspect that a lot of investors don't look at is other lenders. There's a whole range of lenders out there. We've got hundreds of lenders in the Australian market, not just the big 4 and some mid-tier banks. There's third-tier lenders, there's private lenders, there's hard money loans. There's lots of options out there when it comes to lending. So if you've hit your cap with, say, CBA and you've reached your 6 times debt to income ratio, you could look at a non-APRA regulated lender. Think of a Pepper Money or Liberty Loans. These lenders have more flexibility and typically have slightly higher risk profiles. So if you're willing to pay a higher interest rate, say a 2% premium, you'll still be able to access lending potentially with one of these lenders. This is how you can potentially grow and scale a property portfolio once you've hit your lending cap with a major Australian bank. If you're willing to take on that risk and pay slightly higher interest rates, you can continue to grow your property portfolio. And the way I like to think about it is your average property portfolio as an interest rate as a whole. The way I want to run my property portfolio is as a business. So as a business decision, if it makes sense to continue growing and pay that higher interest rate, then it's definitely something you should consider doing. Now, when it comes to debt to income ratios, there's only 2 sides of that equation. There's the debt and the income. So we spoke initially about the income side, how you could look for higher yielding properties or grow your day job income and how that would boost your serviceability. You can also look at the debt side. So can you restructure your debt? Could you potentially sell down one of your properties that's not very high yielding and push those funds into a unit block or a couple of townhouses on a side? Property is a fluid game and strategies should be fluid. You should have a general view as to what you want to do with your property portfolio. So for Emily and I, we set targets of growing, say, a $3 million, then a $5 million, and eventually a $10 million portfolio. But how we get there is fluid. You don't know exactly what property you're going to buy at what point in time. So it's important to understand the finances, look at the big picture, run it as a business, and negotiate between brokers and banks to continue growing your asset base. At other points in time, if you are hitting your limit in terms of debt to income ratios, maybe it's time to take a step back. Emily and I have a $5 million property portfolio, and as it stands today, we're not looking to make another purchase this year. We have other plans to grow our asset base by renovating properties, by adding value to our current portfolio, but at a certain point in time, people are going to get stuck, and that's not necessarily a bad thing. You'll need to re-strategize, look at the properties you have and how you can add value to them, and how you can restructure your debt and your assets to continue moving forward. So if you're hitting that lending or serviceability ceiling, take a look at your debt to income ratios, have a detailed chat with a broker or bank, and discuss the strategy moving forward. I actually offer free strategy sessions if you want to have a chat about your current portfolio and you're looking to potentially buy a property in the Brisbane market. So if you're interested in having a chat with myself, book in a free strategy session at purposeproperty.com.au. If you got any value out of this video, make sure you drop a like on this video. If you've got any questions about lending or debt to income ratios or lending ceilings, make sure you leave a comment down below. I respond to almost all the comments and love having a chat with people in the comments. So leave a comment down below about finances, lending, and the strategy game in terms of property. Make sure you subscribe to the channel and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.